Welcome back to the channel. At the Fed's upcoming meeting, we're expecting a 0.5% interest rate hike. So what is this going to mean to Bitcoin and cryptocurrencies? What can we do about it now? Let's take a look in today's update video and what to expect over the next couple of weeks as well, with more announcements coming for the Fed and of course the Australian market. We'll touch on that briefly. You know what to do with those numbers. Smash likes, subscribes if you haven't already. Thank you so much for your support in the likes down there, and of course your feedback in the comments. Let's dive in. Thanks to our channel sponsor Bybit, we can get up to 15% on your stablecoins and up to $4,100 in sign-up bonuses. And also SwiftX, where you can easily buy and sell cryptos in Australia and also stake to earn interest. The links for SwiftX and Bybit are in the video description. These sorts of websites are really handy to check out high impact news announcements. They help if the market is subdued like it currently is with Bitcoin. And if you get a high impact, looking at these red little indicators here, that could show that there is a potential for very high impact in the markets, bringing on extra volatility. So pay attention to this, especially if you have opened leveraged orders. This could really affect your stop placements. So this is forexfactory.com/calendar, handy to use if you're trading Forex or CFDs. We can see that this is coming up for the meeting is at 4 a.m. Australian Eastern Standard Time, but of course US time, this is in the middle of their day over in the US. You guys watching over there. The Fed meeting is expecting a rate hike of 50 basis points overnight, or for the US over in the day. We're also looking at the rates to go up to about 2.5% by the end of the year. We'll look at that and how that can happen to get there with the 6 remaining meetings, if you include today's meeting as well. Markets anticipating the rates will exceed 3% by 2023. A rapid reduction of the Fed's $8.9 trillion balance sheet as well. You know, this has already started. They started trimming the balance sheet by $95 billion per month. So essentially not printing any more money at this point. However, I think the big thing that potentially people are missing is the amount of money that can be created by the banks moving forward, leading into the second half of the real estate cycle. We really haven't seen too much credit being created by the banks in comparison to what they are capable of. Sure, they're always creating credit, but what they're capable of, I don't think we've seen the extent of that yet. And that is really what's going to blow up the real estate market, and then those gains are obviously going to come across into the stock market, real estate sector, banking sector, housing development, home builders sector. There are a lot of stocks that are still yet to go up and have high valuations. So these are the dates coming up. This is the 6th one here, or the first one, May, and then we have the 5 to follow. So 6 in total: May, June, July, September, November, and December, all coming up. So if we get a 0.5% rate increase tomorrow, that then leads us to a 1% interest rate. Then potentially we can go another quarter, brings us up to about 2, and then potentially another quarter, another half. But that could happen at any which pace along the way. Maybe even June we go another 0.5%, and then quarters all the way up until December, which brings us out into roughly that 2.5% interest rate hike. And that potentially is then known in the market, which is why we might not see the market dump so hard leading all the way into December. If we've basically got to 2% by the middle of the year, then we're nearly there to that target of 2.5. And then of course we have enough room to move a little further in 2023 as well and not go up so fast. As for the balance sheet, we can see this has started to taper off, and now we're getting a reversal. This did happen through 2014, 2015, 16, and then it dropped into 2019 before they started to pick it up once again. And then of course the crash in March 2020, the COVID crash, happened here, and that's where we picked up in a lot on the balance sheet, but it looks like they're tapering this off now. But as I said earlier, there can still be a ton of money coming to the markets in the way of credit creation by the banks. That of course doesn't mean it has to lead to inflation. So the Fed can fight inflation, raise the interest rates like they're doing now. We're at 8.5%. Currently, we're going to have more data out next week. So stay tuned to the channel. Make sure you're liked and subscribed. If you want to see this show up more often, watch the videos all the way through at half speed. That's the best way to help out the channel, using that algorithm to our advantage. But anyway, looking at the news for Australia, we had our first interest rate hike in more than 11 years. I'll quickly touch on this before I get to the charts, just for my Aussie viewers. Today, the RBA raised the interest rate by 25 basis points from 0.1 to 0.35. So we're only 0.15 below what the US is. And potentially by tomorrow, the US is going to be at 1 and we're still going to be at 0.35. So I don't think anyone is really expecting these rates to stay so low forever. And in terms of a 500 grand loan, this has basically put $65 of pressure on that monthly budget for anyone that has a $500,000 loan. So about $15 per week. I don't think that is going to break the markets. But if these markets started to jump by 1, 2, 3%, we'll have to see how that affects the market and what stage we're in within the cycle. Because what tends to happen in the real estate cycle is that the Fed raises the rates too fast towards the end of the cycle, which is then what tips it over. At the moment, they're still raising things relatively slowly. I would say that goes for the US as well. It seems like they'd raised it a little too slowly and they're trying to put the speed on now in order to curb the inflation early on. So we'll see what happens. But as for Australia, we've got household wealth has increased. US, all around the world, the household wealth has increased over the last couple of years. So there is a ton of money sitting in people's banks accounts. Maybe not yours, maybe not mine, but there is a ton of money out there looking to get into the market. And what better time to get into the market than when the market is down? So again, this is just sort of leading into that second half of the cycle of things getting really big, regardless of whether the markets go into a recession, which I'll touch on in future videos, or like the Nasdaq's in a bear market. These are just terms which tend to throw people off what's actually going on in the market and how to make money. In terms of the words, I can't make money from those words, so I don't really care too much for them. Recession, bear market, whatever. I'm interested in the price of the markets I'm investing in, because that is how I'm going to make money. As for numbers of the household wealth, Australian households have squirreled away 140 billion since the pandemic. Total savings now at a record 1.27 trillion. This was in the Australian Financial Review. So good to see that. Now to the charts. Let's take a look at the Nasdaq, what's going on there, but more importantly, the S&P 500 and of course, Bitcoin. That's what we're all here for, is crypto. What can we expect from the markets? Well, the markets aren't really giving away any of their hands. You can see that the price has basically been backwards and forwards since around the 25th of April. And what I mean by backwards and forwards, the old up, down, sideways, is that the price range of the bars has begun to repeat itself. So it's just moving across, it's moving up, moving down in the same sort of price range. So that's not giving away too many signals at this point. The main thing I note though is that the closes are just getting that little bit lower on the way down. So to break this downtrend, I'd want to see the Nasdaq get above 14,300 points. That comes out at the 50% level, which is nearly dead on 14,000 points. It jumps back up past the 50% of the double top. So you can see the double top range. I expect that to play out now that we've hit 100%. I think we'll probably get down to 12.5 and potentially even 12,000 points. But that's going to be over the course of several weeks to maybe a few more months, because it is a longer term picture. But in order to break the double top, it has to get back above 15,300. But at least in the short term, if this news is good tomorrow at the interest rate meeting, at the Fed meeting, and we see the market get back above these levels, then I think it has far more chance of getting to that 15,300. But I think if it gets rejected at these levels, we get a nice little move up, and then over the course of the next few days to couple of weeks, we get rejected around 14,000. Then I think that's going to be a little bit more pressure on the downside, and then we go back to test those levels. So I'm talking about the Nasdaq because of the correlation with Bitcoin. So if that happens over here on the Nasdaq, I expect something else to happen like that on Bitcoin. However, we have seen Bitcoin hold up relatively well. And the stock market, the S&P 500, is also holding up much better than the Nasdaq, the tech sector. It's got a similar sort of pattern with this double top in play at the moment. You can see that we've come down and we are testing those levels now back at 4,000. Just had a little bounce from that and looking more towards the major support at that 4,000. 3,900 is also still in play at this point, and for the market to break this double top, has to get back above 4,600 points, because that's where the double top starts from. So that would be an invalidation of that signal. But the first minor steps, we get the good news overnight, we get the good news tomorrow for the US. The Fed only raises it maybe 0.25%, which I think most of us doubt, but if it is 0.5 and things start to look a little bit better over the coming weeks and we do get a break above 4,400, it's looking more towards the bulls, and that positions Bitcoin in a relatively good state because it has held up above all of those previous major lows, whereas S&P and the Nasdaq have broken below them. And those lows, if you are not a regular viewer, those lows are here at January and February. So this is the strength of Bitcoin at the moment compared to the S&P, which broke those lows. There's January, there's February, and we got a lower low in March. Nasdaq, in case you missed it, there's January, there's February, there's a little one in March here, and then we had a further one down here in April as well. Potentially that was April as well for the S&P. So of course it's April, it's only a couple of days ago. But for Bitcoin, we haven't seen that yet. January, February, we're higher here. We've got a little low here in March, and then we're just sitting at March's low at the moment. So it could be almost a double bottom, and we're looking for that move up. To get that move up, to get this strength in the market in the short term, go into an hourly chart and just see what we can find here. $38,400. There is the 50% level. We know how well these work in terms of a support and resistance zone for the market to recover from. So we get a little hit at 50% and a rejection. Not looking good, but it has to be on a longer term time frame. We're on the hourlies here. We've got less than 24 hours to go until the announcement. So if we can get a nice close above 38,400, going to be great in the short term, at least for the hourly and sort of around the 4 hourly. Going towards the daily, back to 39. We need to get 39,200 back above these highs, which were rejected at the larger term time frame, 50% level. You can see that there. If I remove some of these 50%, you can get an idea of just this time frame right here, and the market came up, rejected, and fell back. Good news is it did hold up above that 1st of May low for now, and we're just trying to get our way back to those first levels, 38,200-ish, and then above 39,200 before we can then start to tackle the $41,000 level. For me, there's a lot of ifs and buts in the market at the moment, and I understand that it can be very frustrating, but if you just look at what the entire market is doing here in Bitcoin, it is also frustrated and it is also uncertain. You can tell the uncertainty here because of how narrow the ranges are. So no one knows exactly what is going to happen next. But what I'm using here are the 50% levels for support and resistance to give us an idea of what some of the potentially the smarter investors are looking for. I think if we get the rejection at 39K, that 50% level, 39,200-ish, then we'll probably expect another retest of these lows at the $37,000 level. But if we can break above that and hold it, that puts us in a better stride to test those higher levels. And if we do break it, and people are still wondering, do I have to wait? Are we ready to get into the markets? Is it safe enough yet? You'll know that we're above that first resistance level on a shorter term time frame, and the confidence can be in the market there for us. And if we get that next break above the 40,000s, then that gives us another earlier warning sign that we are now building on some strength in this market, at least in the short term, towards those days to potentially weeks if we can get above $40,600, while the rest of the market is still trying to figure out whether it's a good time or not. As for the next areas of resistance, my medium-term bullish target, 43K and then 53K for the longer term. Reason being, 43K right here. I think if we can reclaim that, obviously that brings us back into that strength zone of the market, trying to test that 50K level. So every time we got back above this level, you can see we tried to get into those mid to high 40s, and we've failed every single time so far. But the good news is we're at least holding above these lows for now. So that's my medium term above the 43K. I think that could last days to weeks, just like it did last time. So this was a few weeks in the market heading up. But in terms of the shorter term, 40,000, I say shorter term only from hours to days, because that's essentially how long we've been down here for, basically, a week and a half while we await what happens with the Fed. And then of course that major key level, $52,000 to $53,000, as it was the rejection point pretty heavily before we got dumped for that last time. The next 24 hours are going to be an exciting one and probably a volatile period, especially with such high impact news coming out. Stick around. We'll be back tomorrow with an update. Like and subscribe. I hope you watch the video right through. If you have, leave me an emoji with a stake icon down below. Don't forget your Bybit sign-ups up to $4,100 of sign-up bonuses. And of course, our Patreon link is down there as well. I'll see you guys super soon. Until then, have more fun to get more done.